On the weekly and the daily charts, because there is some stuff going on the longer term charts, and there are some potential swing trade opportunities, although I think these, if you put positions on, you may have to hold them for days and weeks. But anyway, at the moment, it's better than literally looking at something going up one day and then reversing the whole move the next. So here are my suggestions for you. The Aussie versus the Japanese yen. Now then, this is the weekly chart. As I said, we're going to be looking at some weekly and some daily charts today, more than the short-term charts. This is the blue line is the 500-week moving average. Now you can see why the Aussie versus the yen has been holding so nicely up here. Look, the blue 500-week moving average really acting as a very strong resistance level. So back in whenever this week was, let me get my crosshairs on there. 22nd of February. So we had this big spike up on this week. So that was like the last week of February. Big spike up, market pulled down, and then we have gone sideways ever since. So this is a real sort of shooting star candle, quite negative. Since then, the market's traded sideways. Right. And I think really it's the 500-week moving average that's having this effect. This is why we've stalled up here. Now, we are on a very strong bull trend. So the question is, does the market eventually reverse? I'm looking for a topping pattern, a reversal pattern. We're not seeing that anywhere on this chart. And we haven't necessarily got any candles telling us the market's going to turn. But you can see that, well, we were obviously quite overbought, having had such a strong rally on the weekly chart at least. And I'm wondering whether this will reverse. So if we do get back up and retest 85.40, I would then be looking for a double top pattern, which would be more indicative of a potential move to the downside. Okay, so that's the kind of thing I'm looking at. The Aussie US has also got the 500-week moving average, but that's come in higher than the peak. We had this big negative candle here, bearish engulfing candle, quite a while back, and the market never really sold off significantly from there, but it certainly did mark the high for the rally of the Aussie versus the US dollar. You know, a strong rally from March last year, and this big bearish engulfing candle on the weekly chart basically said, that's it guys, rally's over. I'm now again looking for a pattern which might tell me that the market can eventually sell off, and we could have it. I've talked about this before. I'm still monitoring it. The head and shoulders pattern on the Aussie dollar. There's the left shoulder, there's the head, there's the potential right shoulder, and it is starting to shape up now. Over the last 2 or 3 days, we've started to move down. Yesterday we had a big down day, so perhaps this is starting to shape up and turn into a head and shoulders pattern. We've got to watch the neckline all the way down here at 75.15, so we'll see what happens. At the moment, we're trying to hold on to the 100-day moving average, the yellow line. Whoops. The yellow line. But the the 100, the yellow line, and the 50, the red line, not really doing the job that they should be doing, is holding the market up. As you can see, we plunged below it yesterday. We have recovered. We're trying to hold above those moving averages now. So anyway, the point is, don't jump the gun. You don't sell into a short position in the hope that the head and shoulders pattern forms. You wait for a break of the neckline, and even then it can be tricky. But this is the strategy for the head and shoulders pattern. Okay. Moving along to Canadian dollar versus Japanese yen, just checking my notes over here. So again, we've got, now this is actually quite important. Where can I start to talk about this one? Right, we've got, we have had important resistance up around, where am I looking at now? 89.00, 89.30. And where did we get to? 89.16, yeah. So I think we have hit an important resistance level already, and we're starting to see, we've got this negative candle up here, not a bearish engulfing candle, so not massively negative. But again, after such a strong run, it could be that the market will at least start to trade sideways, which is what we have seen lately. This has been a great run up here. Maybe we'll only form a bull flag. Maybe it will be an extended consolidation pattern. Maybe it will only be a bull flag, and maybe it will break higher. But I've just got this feeling that this market could start to turn. Now, again, early days, we don't, oops, there's your weekly chart. We don't have a negative candle on the weekly chart yet. We don't have a bearish pattern on the daily chart yet. but I do think we've hit a strong resistance level. So this is just something I'm going to watch and see what develops. But just be aware that after such a strong run, we may be hitting a little bit of a peak in the Canadian dollar versus yen. But as I say, early days. Right, I want to make sure I don't miss anything. Euro, yen. Let me check my notes over here. Right, this is quite interesting. We have this 16-month trend line going here on the weekly chart. Now, when you look at it on the weekly chart, you can see that basically we spiked above it. So we had a false break. Now, when you're in the middle of this false break on the daily chart, it looks like we've broken. It looks like the market's going to really rock it. But then when you look at it on the weekly chart, you say, oh, look, false break. On the week, we could not close above the trend line. So some bulls have been trapped there now. They're in long positions that they don't want to be in. And the same has happened at the beginning of this week. We tried to push up. We tried to retest the previous high. We just missed it, and we're pulling back. And we're actually down on the week at the moment. So this could be a shooting star candle on the week. We're halfway through the week. We'll see how it develops. On the daily chart, no signals particularly, but you can see the trend line again there, and you can see that we're holding below the trend line. So this might be a false break with a bit of a bull trap, and this market might also be about to turn. Have we got any moving averages that we need to look at? Not really. It's really just that trend line. So again, I'm going to be monitoring that throughout the week, and we'll see what candle we get on the weekly chart by Friday. But again, possibly this could be weakening. Now then, Euro US dollar. Quite a lot going on here. This has been really confusing. Right, it has been confusing, but let's just move on to where we are now. Right, again, lots of up one day, down the next kind of action. There was a steady bull run, but lots of pullbacks within that bull run. You'd get a day or maybe two of upward moves, and then a pullback, and then a day, maybe two of upward moves, and then a pullback. So it's difficult to hold a long position. But anyway, now this could actually also be quite a big head and shoulders pattern. Early days still. There's your neckline here. Another one to watch could be the left shoulder, could be the head, could be the right shoulder. I thought we had a head and shoulders pattern within there earlier, but that didn't develop. So this could be a big head and shoulders pattern. All this sideways consolidation that we've been seeing over the last month just could be the tail end of some big patterns that are forming with some huge moves. Maybe later in May, maybe over the summer. Something that we've really got to monitor closely though. And this is why you've got to sometimes take a step back, look at the weekly chart and the daily chart, because I've been so focused on the daily chart, the 4-hour chart, the 1-hour chart, watching these markets develop these sideways trends. And this morning when I got up at 4 o'clock, I thought, right, I've really got to look at the monthly charts and the weekly charts and daily charts. So I've been doing that. And then you start to see this big picture and you think to yourself, wait a sec, there could be some big moves coming here. Okay, so in the shorter term, we have got some strong resistance now around, I would say around 120.80. Well, what have I got on my notes here? 120.60, 120.80. So we've got the 100-day moving average at 120, call it 120.60. We've got the 61.8% moving average at 121.00. So, okay, that is a 40 pip range. It's a bigger range than I would normally use to identify an important level, but it is worth noting because we're now trading back below the 100-day moving average. And look, it had worked really well as a resistance level on the way up and as a support level once we'd broken above it. So the fact that we're trading below the 100-day moving average now, holding below 120.60, I think it is significant. We have got good support around the mid 119 area. I've got 119, well, I've got 119.6545 to be precise. And that is around this 38.2% fib. And it's around the 50 and the 200-day moving average. So this will be the big test on the downside for me initially this week. Having rejected what I see as strong resistance at 120.60, 120.90, I think we will head down towards the mid 119 area, 119.6545, as I said, and I think Greg also touched on that yesterday. So that's my target for the downside. Let's see how that develops, see if that support holds. If it doesn't, then this head and shoulders pattern could really start coming into play later in the month. Cable is just another example of a sideways moving market. So if you're keen on scalping and just trading in and out of levels, I just want to remind you of the fact that this one's doing quite well. Put these levels on your smart chart. So you've got the horizontal line going back to the 26th of February, and you've got the horizontal line on the lower lowest end of the range from the 25th of March. And I've got this little trend line here which I put in a while ago, and it just seems to be working. So that trend line comes in from the 18th of March, and it joins the peak at the 6th of April. And look how nicely it held on the 22nd of April, and on the 30th of April, and indeed on the 3rd of May as support. So nice little trading area if you're interested in scalping in and out. You can even, this is the daily chart, so even you can hold a position overnight on this market and maybe take advantage of moves of up to 200 pips if you manage to catch, you know, this horizontal trend line down to this support line. Note how this descending trend line also has the 100-day moving average come in to meet it. So that's going to add importance to that level this week. That is around 137.90, 137.80. So that is a really good support level for this week in cable. Dollar Canadian, I'm just going to recap what Greg was saying yesterday. We talked about this counter trend idea where the market has held support, this descending trend line support, but the market's so overbought. I actually just talked about this at the end of last week. Easier to see on the daily chart. So the trend line goes all the way back here and really holding nicely. Let's try and zoom in on this. Actually, let's go to the 4-hour chart and really zoom in on this. So, bit of a bounce, not a dramatic bounce, but the market certainly is holding that lower trend line. You can see I've got my fibs on here. So what I like to do is I like to take the swing, if you remember, or if you're new Patreon subscriber, this is the way I like to break down my fib levels. So I'll take the previous swing high, that's obviously a very clear swing high from the top of this enormous red candle down to the swing low, and then I like to break it down. When I see the fibs lining up perfectly, so for example, let me take this one off just so I can show you more clearly. When I see my fib levels lining up perfectly with the price action, with the swing highs and lows as we have here and as we have here, then I like to break it down into some more I call them sort of sub fib levels. There we go. And that just gives me some other minor levels and some other minor targets. And you can see this worked really, really well. This 23.6% fib at 123.23 was the perfect resistance level initially when we bounced off that trend line. Yesterday, we managed to get up through there and get up to the next, well, very close to the next line, which is 123.55.60. Our high was 123.50. So we were a few pips off that. You can see on the 4-hour chart, the 50-period moving average descending into that zone as well right now. So that again will be a strong resistance level at 123.50, 123.60 today in the dollar Canadian. And that means we'll need to get through 123.60 if we are to start to see a significant bounce off that trend line that we have on that daily chart, which I will go back to right now. So just keep that in mind. As Greg said yesterday, relatively low risk reward play there, even though it's counter trend, and I don't like trading counter trend, but the risk reward is fairly low because obviously you break below the previous low, which is 122.64. So break below 122.50 and you're out of that position, pretty low risk, but on the upside, we do have some good potential moves, especially if we can get through that 123.60 minor resistance that we've got on that daily chart. Just be aware, if CAD breaks lower, we've got the 500-week moving average support down here, the blue line you can see on the weekly chart at around 121.90, 121.80. So we could break and we could then hit that support level and bounce off it and then really go. So it's something we've got to watch this week. Break below that 500-week moving average and it's all over. I think the bulls are blown out of the water. So again, something quite interesting to watch as we go through this week. On to the Dolly Yen. Dolly Yen's been quite kind to us lately. The levels have been working. Seems to be picking up some volatility a bit lately, as you can see on the daily chart. Let's have a look at the weekly chart. Get that bigger perspective. So the 38.2% fib Bonacci support level kind of worked. We overran it a little bit on the downside. Now we're bouncing back, and you can see we've got 61.8% fib up here around 109.60, 109.70. And what is also important is a very nice trend line going all the way back to 2016, the end of, well, let's call it the beginning of 2017. You know, this is the big pattern for the dollar yen, which you won't know about if you haven't looked at it on the weekly chart. There we go, this big wedge formation, and we're just testing the upper end of the wedge. Now, we've had a false break higher and we've pulled back below it. I'm sure a lot of bulls got trapped there, and we've pulled back below it. Now, if I can just grab this chart and move it along, you can see another reason why we do have very strong resistance around what is a 61.8% fib on the daily chart, and we will look at that more closely. But I just want to show you how that trend line is coming in pretty much bang on that 109.60, 109.80. Let's call it 109.60, 109.80. That's a big resistance now, I think, for the week in the dollar yen, and it certainly is holding. Look at this negative candle that we had. That would have been on Monday. So we tried it. We got up to 109.68. We tried it. Bang, pulled down. Quite a negative candle there. Long upper wick, big red body. The bulls all trapped up at the top of that on that wick there, and we haven't managed to retest that. So just watch 109.60, 109.80. That's the key resistance level of the week. And then on the downside, we have some support. Where have I got my support at? Oh yeah, we've got support now. Where can I show you this? Yeah, well, you can just see it from the fib levels. I don't want to dwell on this too long. The big fib level, hang on, let me scale this. There we go. The big fib level at the moment, I think it's probably easier to see on the 4-hour chart. If we reject 109.60, 109.80, we've got some support down at sort of 109.00, 108.80. Let me just get my crosshairs back. Yeah, 109.00, 108.80, break below 108.80, and then I think we'd see more significant moves to the downside, and that's when that big resistance on the weekly chart would really kick in. We've also actually got the 200-week moving average, the green line, at 109.00, 108.80. So that's another reason why that is a really important support level. We'll watch that into the end of the week. If that gets broken, if we close below it on a Friday night, that would, I think, be quite significant on the downside. And it certainly would mean that these 4-hour moving averages have been broken. Okay, so that's quite interesting for Dolly Yen. How am I doing for time? Yeah, I've got a little bit more time. Okay, gold. Gold has been really tricky, and even on the weekly chart, not really very, very clear. Now, we are in effect on a weekly chart in this descending channel, and that hasn't changed even though we've had a good rally. Even though I talked about, do you remember I talked about this double bottom pattern, how I thought gold should recover, and we could be seeing the end of this downward period from August of 2020. Massively bullish candle on the weekly chart here with the spike down. Can you see that? And I think that's called a gravestone doji, and the market rocketing up to close the week unchanged. Now, we haven't really had the kind of rally that I'd expected, if I'm honest. That, by the way, was just above the 100-week moving average, so it really was a great support level. We haven't really seen the kind of rally I was expecting. Initially a strong run up, but now, again, like so many financial markets at the moment, lots of sideways action. We're struggling at 1800. And we are likely to continue to struggle at 1800. As you can see, I think it was yesterday. Yeah, yesterday we really pulled back from there. So this candle is a massive bearish engulfing candle on the 4-hour chart. Look at it, straight up, new high. Would have sucked in all the bears at 17.99, and then all the bulls rather, and the market absolutely collapsed. So again, lots of bulls probably trapped in losses from yesterday. Risks are probably to the downside now, really. Let's have a look at the daily chart. So as you can see, as we talked about yesterday with Greg, it's the 100-day moving average which is really doing the damage here for the bulls. We retested it yesterday, big rejection, a big red candle. So looking more risks to the downside really in gold if we can't break that 100-day moving average. And yesterday's price action certainly confirming that it is an important resistance level, then really I'm quite concerned about moves to the downside now, having thought that after this pattern we really would rock it. What else can I say? Well, you can see 100-day moving average certainly has done its job in the past, here, here, and here. So it is worth paying attention to. Big support from the 100-day moving average there, of course. It's a good support level when the price is trading above it. It can be a very good resistance level when the price is trading below it. Okay, I think that's it. We'll watch and see if this gold does develop a move to the downside now, having failed to build on those gains that we saw kind of end of March, really. Right, gold I wanted to talk about, and I think that's pretty much it now. Oh, Nasdaq. How long have I been talking about 14,000 being a strong resistance level? If you've been with me for a couple of months, you will know I've really put a lot of emphasis on this level. I talked about this double top pattern forming in the Nasdaq on the retest, waiting for this market to sell off, and finally we're getting it. Over the last 2-3 sessions, we're getting this move to the downside now. 38.2% fib was coming in at 13,355. Yesterday's low was 13,390. So we bounced a little bit up above what is very clearly a strong support level on the daily chart at around that mid 13,300 area, coupled with the 50-day moving average, the red line. So that really is the key support now, and it has held. Maybe we'll trade in kind of 600-700 pip range. Maybe we will try to get up above up to that previous up to the all-time high. Kind of doubt it now. I think if anything, let's have a look at that. Why have I got that trend line on there? I need to have a look at the 4-hour chart to see how relevant that trend line is. There it is, just from that little sort of neck of the double top. So we've got some resistance around the 13,600, 13,650. Do you know what? I'm going to call it 13,650, 13,750 if we get up there. That's now going to be the key resistance level. On the 4-hour chart, we've got a negative moving average cross. Finally, the 50s cross below the 100. So that's sort of adding to the downward pressure, I would say. What have we got on the daily chart? Yeah. Okay, so really, it is a question of what happens around this 13,350, 13,300 area. That's the key support level now. We'll watch to see what happens on the weekly chart. If we close below there on Friday, that would really add pressure next week. That's pretty much all I can say on that market, watching that support level. S&P, however, not really anything particularly negative. It just looks like it's consolidating at the moment. We will see if we get any sort of negative pattern on there, but right now it's just more of a consolidation than anything as negative as we see on the Nasdaq chart. Can we build into a pattern? Can I argue for anything? I guess I could argue that we could see some sort of head and shoulders pattern here, but again, jumping the gun. Take that trend line off. Let's see if that builds a head and shoulders pattern. As you can see, very long shaped head that would be, a short shoulder, a long shaped head. Maybe we get a short shoulder here. Let me just try and blow this up a little bit. Give you a good perspective on it. There we go. Yeah, so when you look at it like this and I kind of stretch it out, you can kind of see a bit more that it could be a head and shoulders pattern. This could be the left shoulder. This could be, would that be the shoulder, or would that whole thing be the shoulder? Anyway, doesn't really matter. Head. Now, are we forming a shoulder here? Let's throw some Fibonacci levels on it, give us some idea of the levels that we would need to hold to see this potential pattern work. 4180, 4190 looks like a strong resistance for today. It's the 61.8% fib. It's the 50 period moving average on the 4-hour chart. Watch that one. Let's look at it on the daily chart, see if there's any moving averages there that I need to be aware of. No, all the moving averages are of course below the price because we've rallied up so much. Okay, so that's one for us to review tomorrow morning as well. See if that shoulder could be forming. Break below 4120 would then complete the head and shoulders pattern, and we could see a move down by as much as, well, it would be a 100-point move. So we would be looking at around 41, 40, 20 probably around this area. We'll put some more fibs on there and have a look for some downside projections if that one plays out. For now, it's early days. Let's see if the market holds 4180, 4190 today, that resistance level that I've identified. Okay, I think that's it for today. I hope that's a bit more useful. Looking at the longer term charts is giving us some potential trades now, some swing trade opportunities. I would love to see those play out kind of in a week or two start playing out, we could really see some significant moves over the summer, and we could really have some fun and games with this. So that's it. Okay, thanks for joining me today. Hope you found that useful. Please join me tomorrow, 7:30. We'll look at these patterns and these markets on the daily and the weekly charts. Again, see how things develop.